What's up, everybody? Jonathan Rose, owner, Masters in Trading. Welcome back. Welcome to 2020. So let's get started. Let's talk about the potential impacts on the U.S. after a top Iranian general was killed in U.S. airstrikes ordered by the president. The thing that sticks out to me is the VIX. The VIX really isn't moving very much, which just baffles me. I personally think that the VIX isn't moving because it's January 3rd, it's Friday, and people are still not back to work. I think with the uncertainty that this brings going forward, it needs to be reflected in the price of risky assets. So right now, VIX, historically, or what's the historical low of the VIX? Like 11.5? So let's go on a weekly. I guess back here it got under 10, but right now it's at 13. With the massive uncertainty, this just seems way too low. So let me put it in perspective. So what I did here is I overlapped the VIX, the OVX, and the GVZ. So we can look at it as the OVX is going to be oil volatility, gold volatility, and then volatility of the S&Ps. The S&P VIX is not really reacting to this. Let's look longer term. Even if we look longer term, going back to the beginning of 2018, we can see the VIX just not really doing anything. Everything else is going higher. So most important right now, protect your portfolio. How can we do that? Well, S&P's 3236. The all-time high of the S&P is 23 points away. We're less than 1% from our all-time high, even with the U.S. now in a very vulnerable position after this Iranian general was killed in an airstrike. The number to look for in the S&Ps is going to be right here, 3212, and the low here is going to be 3213. So let's call this our line in the sand. And a line in the sand is simplifying technical analysis. So above, bullish, below, bearish. Above here, not so bullish, but I'm respectful of the long side. Under 3212. That's going to be our line in the sand. Any trade below there, you have to think the VIX is going to spike. I personally think the VIX is really inexpensive right now. I think the worst positions any trader can have right now today is short volatility, short credit spreads. We don't want to be short credit spreads because then we're selling a very, very inexpensive VIX. If anything, we want to be long volatility. You want to own calls, you want to own puts, you want to own straddles, strangles, debit spreads. You do not, let me repeat, at these levels, you do not want to be short options. The risk versus reward is very unfavorable for any kind of credit spreads in this environment. Now, every weekend I share 8 to 12 of my best trades with the Portfolio Masters Club options members. What I'm doing is I'm going to defense. Look at defense areas. I'm looking at Lockheed Martin. I'm looking at Northrop Grumman. Having trouble pronouncing that. Also looking at some defense sector ETFs, looking at them relative to one another. Really important right now, guys. You want to be in some kind of defense stock, or long gold, or long oil. You want to be protected in the S&Ps. An easy way to do it is buying puts in spiders. Let's look at those. If you want to look for protection in the spiders, let's look at the equivalent level of what we had in the S&Ps. So in the spiders, the low is going to be 320.15. So let's go over the options. Remember, 320.15 is going to be our line in the sand. For protection for the spiders, I'd want to go further out. So I'm in February, 49 days. 320 is our line in the sand. So if we're looking to buy puts for protection, we do want to make sure that we're past that 320. But also, this is expensive. I don't think we need to go all the way up here. If we're just going to look for some insurance protection on our portfolio, these 310s seem like a much better value. Then, as the market comes off, we might look into doing a vertical debit spread by buying these 310s, and maybe we sell these 300s as the market goes lower and if these approach 2 or something like that. So that's what I'm thinking. I don't want you to sell options, guys. There's just not enough premium in there with the VIX trading 13.5 with all the tail risk that's going on in the market right now. So trade smart, protect yourself. Should be a really good trade in January with this increase in volatility. My name is Jonathan Rose. I'm the owner of Masters in Trading.